It is budget time. I've got two fantastic experts to help us navigate and understand what is essentially a federal election budget. It still has some implications. And let's talk through. We've only got quite a short period. We're going to make this session quite short and snappy. If anybody at home listening has more detailed questions, as always, please feel free to reach out to your Maduras team. We're here to help. Brisbane, Gold Coast, Sydney, Melbourne. There's absolutely a plethora of experts available for you and your personal situation or your business situation. Today, joining me, I have Ian Fox, one of our directors from Melbourne. Foxy, great to see you. Thanks for your time today.
No worries. Good morning, Gav. Always good to catch up.
Thank you. And Nicholas, how are you? One of our other directors in Brisbane, bringing our accounting and business advisory perspective as well. So, gents, great to see you all. As I said, we'll try and keep this short and sharp. There's a few things to cover. It's an election budget. Initial thoughts, Foxy.
Oh, look, I think from initial shorts, it's basically is an election budget. There's nothing really earth-shattering in it, and in fact, it's really a pretty boring budget. Interesting to see what gets passed before the election's called, and what's not, because I know there'll be a bit of politicking on it all. But realistically, the budget wasn't expected to be delivered, and it shows.
Yeah. As I said earlier, I've got question time on in the office now. And there's lots of standing up, lots of hands, lots of gelling. So we'll see what happens. Nicholas, anything from you, mate, as an initial insight?
I agree with Foxy. I mean, in terms of, some of the takeaways there, there's a modest reduction to the personal tax rates. There's some more energy relief, as well as some Medicare bulk billing and reduction to medicines under the PBS. And then, so interestingly, the government have announced that they want to ban some non-compete clauses for employees, which will hopefully increase some competition. And then the ATO is set to receive almost $1 billion in funding for compliance activities.
So that's where they're going to fund the $5 tax cut, is it? More fines?
Partially, yes.
Partially, instead with some skepticism. Okay, gents, well, let's get stuck into it. I'm going to break the first question up into individuals and business. Foxy, a couple of key takeaways. Nick's covered a couple there. What are your 2 or 3 top points for individuals to be aware of?
Oh, look, I don't have nothing to be aware of. I mean, realistically, the modest tax cuts of the $5 a week doesn't even start till the 1st of July 2026, and then another $5 a week the year after. Medicare thresholds going up a little bit for low-income earners, but again, nothing significant. The electricity or the power reductions are just a continuation of what we've already had, and just going for another 6 months, basically. Interesting, the non-compete clauses is something for individuals to be very aware of. It is something that's quite common in particularly professional services, so that could have some sort of a benefit. The benefit scheme for the medicines, it's good, but again, it's all that's just modest. I suppose one of the things is the help reduction of help fees, or what we used to call HEX fees. That is significant, reducing that by 20%. So and extending the TAFE places to 100,000. I think that's an important one for younger people to have a little bit of a look at. Other than that, realistically, there's not a lot in it that really makes too much difference to the average person. It's a little bit of a feel-good thing. Again, just it's nothing significant to be really looking out for. I actually think there's more that wasn't said or adjusted that I'll get to a little bit later, that it's actually bigger for people to consider when we look at this actual overall budget, particularly when we get to superannuation.
Yeah, I was going to say, we're looking for things for strategies for individuals to take into account. That's very important for both you guys, that the professional approach to that. So the other thing, the Medicare levy, the ability to do more healthcare, I think is great. And, the HEX, a big thing. So very much around cost of living, a great opportunity for us to leverage off. Nick, in terms of businesses, anything from your point, a couple of quick points that we need to be aware of?
So there's $800 million provided to the Expand to Help to Buy schemes. So looking to reduce the size of the deposit required to buy a home. So, hopefully that will continue to stimulate the construction sector. We mentioned the ban on the non-compete. So that's just something for small business owners to be aware of. But really for businesses specifically, there weren't any major reforms or measures put in place for businesses.
Yeah.
Can I just also touch on that help to buy? Again, that's just an extra 40,000 to a program that is already in place. It's not like it's something new. It's just a bit of an extension of what is already in place.
Yeah. I suppose the summary say, they're very much focused on their ability to hopefully affect cost of living. It's something they can give a quick win to the populace for. So we've got a couple of changes there. Medicare levy, HEX, a couple of things you mentioned now, Ian. In terms of if we're starting to roll those basic steps that can, good things, they're quick to implement and they're quick to come. And this is no political assessment, by the way. I'm talking purely factual here. What can we start to think about? Is there anything we need to be aware of if we're addressing our current financial situation, our planning, our discussions with our professionals as an individual business owner?
Oh, I think it's really what we've already been doing. Again, tax cuts were already based on something that was the main part of the tax reductions have already happened. They're in place. We know that they've already gone through. So we should already be doing the planning about that. The Medicare, most cases, it's just a question. You've got to earn next to no money to be able to get any benefit from that. So there's no real planning around those sorts of things. So again, it's like we do need. There are a lot of significant issues that we have. This is a budget that they've tried to put a little bit out to everybody, but that won't have any impact on, or shouldn't have any impact on inflation. So it's when we look at that, and I think there's always that overriding concern at the moment as to what's going to happen on the 2nd of April when the tariff war starts, apparently. And that's all built into this at the moment. So from a planning perspective, there's not really a lot to get your teeth into in reality that we shouldn't already have been doing and we shouldn't already have been thinking about.
Okay, so the posturing continues individuals as other than the other ones that we've spoken about, the ability to make sure you can get to the doctor more often, which I think is fantastic and more available for people. Nick, for SMEs, what should our small business owners, we think mum, dad businesses up to 5-10 mil, those sort of turnover businesses, what should we be looking at there? Anything changing with compliance, anything changing with things that they can be aware of, opportunities for them?
No major changes. I mean, there's a continuation of the instant asset write-off for some assets under $20,000. So, that will continue to help, but there's nothing major for small, medium enterprises, sort of turning over that 5 to 10 mil that we haven't seen previously.
20K instant asset write-off. We've seen that turn into, I've seen Foxy nodding. We've seen that turn into, a bit of buyer's remorse at times, people jumping in and buying things. Anything we need to be aware of? What can you get a little bit more detail on? What is a 20K instant asset write-off? And there's obviously implications. Every good thing has an opposite side of the coin. What do you need to be aware of?
So this is a measure that if you buy an asset, for example, so let's say a piece of machinery for $20,000, then you can write that off entirely for tax in the first year. So let's say you're on a 25% tax bracket, then you can get a tax deduction of $20,000. Now, in future years, and this is coming to your point about the reaction, you're no longer able to claim a depreciation deduction for that in years 2 and beyond. And the sting in the tail is probably if you were to sell that asset in the future and receive money for it, then because the tax base for that asset is zero, you may need to pay tax on the profit that you receive for that particular asset. So we've started to see that a little bit with some clients where they wrote off larger assets purchased during the COVID period, and now they're starting to sell that. But it's just something to look out for.
Yeah, thanks. I think it's really important that we understand, and they're the conversations you have in doing your planning, your forward thinking. Also, can I just get a thumbs up or thumbs down? Despite my number of efforts trying to claim this, is an asset a jet ski?
You run a jet ski business?
Depends. The answer is always depends.
I threw a thumbs down, but I heard that depends. I'm running with that. Okay.
Can I just add? I mean, and you know, it's really important what Nick came up with there in regards to the instant asset write-off. It's any decision that's made based purely on tax is not the right decision to make. We're so focused on just tax savings, and there was a couple of little hooks that were in there. But you just think about it, if we're in a company and we get 25% tax deduction on the full amount. It means we're still paying 75%. Do we really need that asset, and is it going to generate more income? Now, it's the same for an individual. Don't just do things for tax purposes. Do things because it's going to generate you more income in the long run. You've got to do a cost-benefit analysis of any decision. We just get so focused on tax savings, and politicians like to throw that little thing out there to make it sound like they're doing us a really good favour, but often it creates behaviours that aren't in the best interests of our clients.
Correct. That behavioural economics we speak a lot about, not for today, but it certainly does have an impact. Gents, thank you very much. We're going to wrap up now. Nick, I'll start with you. Key takeaways. What do you want people thinking and talking about? And most importantly, what should they be thinking and talking about to their advice professionals? What can they come and start to think about with you guys?
So around superannuation, if they do have balances around that $3 million, then the government is still looking to tax the fund at 30% on the future earnings and potentially unrealised capital gains. So that's something to really be conscious of and mindful of if that legislation does pass through Parliament. But, it's unlikely to in this term of government. So we'll have to look to see after the election as to how that goes.
Yep. Okay, thank you. Foxy, for individuals, same question?
Yeah, it's basically, I mean, again, and this is what said, this was what's not in this budget. Basically, it's a simple fact. If it doesn't go through in this term of Parliament, it doesn't exist for the next Parliament. So so there was a lot of it's a really, really poor tax. For the first time in history, we were going to tax unrealised gains. It was totally. It was basically looking at a very, very small proportion of people, and the impacts were significant for people who were actually doing the right thing, particularly our farmers and people who do produce a lot of our agricultural needs of the country, and understanding how they all work and things in utilising self-managed superannuation funds. It was really a nonsense tax that was inefficient and unfair. So it will be interesting. I can't see it passing through Parliament, so I don't keep an eye out just in case it does. And as professionals, we need to keep an eye out, particularly if we've got clients, whether they be business clients or individuals that have over that $3 million threshold. But reality is, I don't think it's going to be a non-starter. And it's interesting. That's one of the things in the forward estimates, the taxes raised from that. So I'm glad we're not putting up a whole lot of statistics today, because they're just nonsense, to be quite blunt.
Yeah, well, I think that the exciting maybe even the wrong term, the interesting time is going to be the reply, and then the next 6 to 12 months as we go into election anyway. So as you're right. So, Jan, thank you very much for your insights. For everybody at home, thank you for joining us. As always, as both Ian and Nick have just indicated, we continue to remain ahead of this. We will continue to update. We'll continue to make this personalised for your current situation, whether you be an SME, a larger business, an individual, or a group of all of the above that work with us. So we'll continue to stay all over this and be in touch. Gents, thank you very much for your time. Ladies and gents at home, thank you very much for your time. I took out of that I may be able to get a jet ski, and the rest of it is all wait and see. Fantastic. Thank you, everybody.